US market update for December 31, starting of course with the SPY, and we can see here that we had about a 0.5% drop in the SPY, down from the recent highs. Not putting too much stock by this. We're expecting perhaps a little bit of a pullback, and we're looking for it to pull back even perhaps another $1 or two, but ideally we're wanting for the bulls for it to hold this gap here in order for us to be setting ourselves up nicely for the next bullish leg trade. If we do however see it break down, we potentially would be looking to do a short-term trade down to about this level, but it's early days yet, and we'll see what the next session brings. Okay, to the diamonds, and the diamonds also just dipped a little bit, about 1/3% there, down to about this level here. We wouldn't mind seeing a bit more of a drop down, pull back down, to set us up for a potential reversal pattern and a bullish trade up from there. Back to the Qs, looking a little bit weaker on the Qs as we've failed to make a higher high, as I mentioned in previous updates. We can see here that there was this little inside day in the previous session, and we saw a drop from there. We may see some further weakness here, maybe looking at maybe the 50-day moving average or the this gap here to provide some kind of support. Either which way, we're not really bearish on this, but we are expecting perhaps a little bit more of a pullback before moving higher. Okay, and the IWM Russell also took a bit of a break, going down about 0.6%. We can see that wouldn't be the worst thing in the world if this fund actually pulled back a little further, perhaps to retest the neckline before moving up higher. Not expecting huge moves on New Year's Eve, however. USO gave us an inside day, so no further dramatic drops for USO. And if we're looking for a little bit of a setup in the markets, then perhaps XLF is going to provide it for us. We can see here that over the past little while we had an inside day followed by another inside day followed by an outside day followed by an inside day. All non-trending days, however, it is building up a little bit of pressure for a potential burst to the upside or potentially the downside as well, once the pressure gets too much. And finally, a quick look at GLD. Once again, it's reclaimed this 50-day moving average. It is bouncing around quite a bit, so at this stage, short of looking at non-directional positions such as strangles and straddles, we're going to pretty much steer clear of GLD until it starts to form some kind of tradable pattern. US market update. Thanks for watching.